The landscape of digital assets shifted dramatically on January 25, 2025, with a bold move from the White House. President Trump signed an executive order, marking a significant turning point for Bitcoin. This order paves the way for the creation of a U.S. digital asset fund. The fund will include Bitcoin, signaling a new era of government acceptance and adoption of cryptocurrencies. The news sent ripples throughout the financial world, capturing the attention of seasoned investors and newcomers alike. The executive order signifies a departure from the previously cautious stance of U.S. regulators. It marks a pivotal moment in the history of Bitcoin, potentially paving the way for wider mainstream adoption. The implications of this decision are far-reaching, potentially impacting not only the price of Bitcoin, but also its perception as a legitimate asset class. Some analysts believe this is a clear signal for a bullish Bitcoin market. They predict a surge in institutional investment following the government's endorsement. Others remain cautiously optimistic, emphasizing the need to monitor regulatory developments closely. As the world's largest economy, the United States' embrace of digital assets could influence other nations to follow suit. This could lead to a more integrated and regulated global cryptocurrency market. Only time will tell how this will unfold, but one thing is certain: the world is watching. To understand the potential ramifications of this executive order, it's crucial to examine the historical relationship between government actions and Bitcoin's price. Bitcoin, throughout its relatively short but tumultuous history, has demonstrated a sensitivity to regulatory news and government pronouncements. Past instances of government intervention, both positive and negative, have resulted in significant price fluctuations. One notable example is China's on-again, off-again relationship with Bitcoin. In 2017, China's decision to ban initial coin offerings in cryptocurrency exchanges sent shockwaves through the market, causing a sharp decline in Bitcoin's price. Conversely, in 2019, when China announced its intention to develop a central bank digital currency, Bitcoin's price rallied, as it was perceived as a tacit endorsement of the technology underpinning cryptocurrencies. Similarly, in the United States, regulatory uncertainty has often cast a shadow over the crypto market. The Securities and Exchange Commission's stance on cryptocurrency regulation, particularly its classification of certain tokens as securities, has led to periods of market volatility. Conversely, positive developments, such as the approval of Bitcoin futures ETFs, have been met with price surges, as they signal growing institutional acceptance. President Trump's executive order, therefore, represents a significant development. The immediate aftermath of President Trump's executive order saw a surge in trading activity. Bitcoin experienced brief volatility, but showed resilience. Initial market reactions were mixed. The price dipped, then climbed steadily. Bitcoin has shown resilience. The price remains above $100,000, indicating strength. This resilience shows Bitcoin's growing maturity. The ability to withstand the shock suggests a positive outlook. Intense debate among policymakers will shape Bitcoin's future. The outcome will shape the cryptocurrency market in the U.S. market. Participants should stay informed. Temper optimism with caution. Adaptability and responsible innovation are key. Section 4. Open Interest Speaks. Deciphering the bullish signals. One of the most telling indicators of the market's response to the executive order is the surge in Bitcoin open interest. Open interest represents the total number of outstanding futures contracts that have not yet been settled. A rising open interest typically signals an influx of new capital into the market, indicating growing investor confidence and anticipation of future price movements. As of January 24, 2025, Bitcoin open interest rebounded to $67.52 billion, a significant increase that coincided with the news of the executive order. This surge suggests that institutional investors are returning to the Bitcoin market, enticed by the potential for growth and the perceived legitimacy bestowed by government recognition. This influx of institutional capital is a bullish sign, as it often brings with it greater liquidity and stability to the market. Increased liquidity is generally beneficial for any asset class, as it makes it easier to buy and sell without causing significant price fluctuations. For Bitcoin, which has historically suffered from periods of illiquidity, this is a welcome development. Traders and investors should be prepared for potentially significant price swings as the market adjusts to this new paradigm. Section 5. Charting the course, technical analysis, and price predictions. Technical analysis of Bitcoin's price charts also provides valuable insights into its potential trajectory. The cryptocurrency has found strong support at its 50-day simple moving average, or SMA, of $98,638. This technical indicator suggests that buying pressure remains strong at this level, making it a crucial support zone to watch. Holding above this level is generally considered a bullish signal, indicating the potential for further upward movement. Looking ahead, several price targets have been identified by analysts. The first target is $110,000, a level that Bitcoin briefly surpassed during its previous bull run. Breaking through this resistance level would be a significant psychological victory and could pave the way for further gains. The next target is $115,000, followed by the coveted $120,000 mark. These targets are based on technical patterns, historical price action, and the current market sentiment. The Relative Strength Index, or RSI, a momentum oscillator that measures the magnitude of recent price changes to evaluate overbought or oversold conditions, is currently in neutral territory. This suggests that the market is neither overbought nor oversold, indicating a balanced market with the potential for movement in either direction. Section 6. The weeks ahead, a critical juncture for Bitcoin's trajectory. The coming weeks will be critical for Bitcoin as the market digests the implications of the executive order and anticipates further regulatory developments. The price action during this period will be closely watched by traders, investors, and analysts alike, as it could provide valuable clues about the future direction of the market. A sustained move above the key resistance levels discussed earlier would be a strong bullish signal, potentially igniting a rally towards new all-time highs. Conversely, a failure to break through these resistance levels or a significant drop below the 50-day SMA could indicate weakening momentum and a potential reversal of the recent upward trend. The interplay between regulatory developments, macroeconomic factors, and market sentiment will ultimately determine Bitcoin's trajectory. Keeping a close eye on news flow, policy announcements, and technical indicators will be crucial for navigating this evolving landscape. As with any investment, it's essential to conduct thorough research, understand the risks involved, and only invest what you can afford to lose. Section 7. A disclaimer. Navigating the crypto waters responsibly. The cryptocurrency market is still in its nascent stages, and its regulatory landscape is constantly evolving. While the recent executive order from President Trump is a positive development, it's essential to approach this market with caution and a healthy dose of skepticism. Investing in cryptocurrencies carries inherent risks, including the potential for loss of principal, regulatory uncertainty, and market manipulation. The information provided in this essay is for general knowledge and informational purposes only and does not constitute financial advice.